This is our winning momentum strategy. So a lot to cover here. I'm going to go through it fairly quickly. But for the benefit of those of you who have never seen us before, we are Trading Wins. We're a group of pro traders with well over 30 years of experience. We're real traders and teachers, and we've been developing our own strategies and trading systems and teaching people from complete beginners to experts around the globe. Now, in today's presentation, I'm going to share with you the exact same money management rules that myself and the other traders here continue to use on a daily basis. I'm also going to tell you exactly what you're going to need to trade this system, and then I'm going to walk you through step by step the actual trade setup you'll be looking for with this system. When we get to this point in the presentation, I will bring up my live charts and ask you to throw out a symbol or two. We can bring up the chart, analyze it together, and I'll show you exactly how this system would have performed on that market. And then, of course, time permitting, we'll answer as many of your questions as we can. So one quick poll question, just out of curiosity. How many of you have seen me present at an event or webinar such as this in the past? If you can just take a moment, type in yes or no, I would really appreciate it. That's great. Thank you. Excellent. Thanks, Michael. Thanks, everyone. Okay, great. Let's carry on. Let's get through this. Please remember, trading can be extremely risky if you don't know what you're doing, so please don't trade with real money until you're completely comfortable. I'm going to share with you a system today that is quite safe and very effective, but let's kick off with the money management rules. This is how we reduce our risk whenever we're trading. The first rule, I'm sure you've heard a million times or more, but it is worth repeating. Please do not trade with money you can't afford to lose. But what this is really about is trading with an amount that's small enough that it feels completely insignificant to you. Trading is so much more about how you manage a trade once you're in it than it is about selecting an entry. And if you're worried about the amount of money that you have in a trade, you simply won't be able to remain calm and think clearly and manage it appropriately. So always try to trade with an amount that feels completely insignificant to you. Also, you should never risk more than 5% of your account balance in any one trade. And if you have a larger account, consider reducing this to 2.5% or even 2%. That way, you'll still have a very sizable trade on, but you'll be reducing your risk considerably. Also, never have more than half of your account or 50% of your account balance active in the market at any one time. Reason being, there's so many factors when it comes to trading that are completely out of our control. And any major news announcement or something like the attacks that we saw last week and those unfortunate attacks in Paris can really drive the markets against you. So this rule is, number one, meant to reduce such a loss should it happen. But should it happen, you then still have half your account sitting there that you can put back into the markets and make back those losses. With what I'm going to show you today, it really wouldn't take you very long. Now, lastly, you should always spread your trades out and select the 1 or 2 highest probability trade setups for whatever time frame you're trading. We've seen a lot of volatility lately, and there's been a lot of back and forth in the market. So whenever you get a very strong day, up or down in the markets, you're going to get many trade setups in that one direction. If you jump in and buy 5, 6, 7 trades in the same direction, and the very next day the market retraces on you, like we've seen happen many times, you're going to find yourself in a huge hole. And that's exactly what this rule is meant to avoid. You want to spread your trades out, be very selective, and only pick the 1 or 2 highest probability trade setups for that time frame. A couple of other sayings that we live by. Number one, you will never go broke taking profits. This is really meant for those of you who are just starting out. As you gain experience in the market, you will learn how to remain in a trade a little longer each time. But until then, when you have a profit, especially in this type of market environment, get used to banking those profits. And please do remember that trading is never about whether you are right or wrong. That's important. But it's all about how much money you make when you're right versus how much money you lose when you're wrong. So what will you need to trade this system? Well, just about any charting platform will do. Now, I'm going to show you near the end of this presentation how to get a great charting platform for free, but just about any charting platform will do. There are 3 indicators that we use for this system, and these 3 are widely available on most charting platforms. It's a 20-period simple moving average, the Ichimoku cloud indicator. It's a very stripped down version, I'll explain in a moment, and the relative strength index, or the RSI indicator. So there really is no need for you to go out and spend money on new hardware or software. If you're already watching this webinar, you have everything you need. Here are a few benefits of the system before I lay out the setup for you. Number 1, it will work on any market, any time frame, stock, options, futures, Forex, any exchange, any price level stock. We've traded it basically around the world. We've traded it with $3, $4 stocks. We've traded it with the higher price stocks such as Tesla, Amazon, Google, etc. You really don't need a lot of experience with this. By the time we're done this session, you'll know exactly how to use this system. It has very clear entry and exit points. More importantly, it has extremely low risk, but most importantly, it has been consistently profitable, not just lately, but through many different types of market environments over a span of many years. So let's get to the strategy. As I said, there are 3 components to this. Number 1, the 20-period simple moving average, and for those of you who might be interested, we have tested this and traded this with exponential, with weighted moving averages, different time periods, but the 20-period simple moving average works best. Also, the Ichimoku Kinken-Hoi or cloud indicator. Now, this is an indicator that is actually used as a strategy in itself, and very popular over in Asia for many years. But we are going to use a very stripped down version just for trend here. And then, of course, the relative strength index. But we have a special setting for that, and I'll show you that in a moment. So let me bring up my charts and walk you through this setup. So here is a chart with our winning momentum strategy template. And here in blue, this line in blue, is the 20-period simple moving average. What we're going to be using that for is to identify momentum. Whenever you're trading, whether it's this system or any other, you really want to be trading with trend and momentum on your side, in your favor. So it's crucial that when you bring up a chart, you're able to spot whether or not you have trend and momentum on your side. So that's where the 20-period moving average and the cloud indicator come in. Now, the 20-period simple moving average helps us measure momentum, and the way we do that normally would be based on the slope of the price bars, okay, or the price action. You know, when it's moving higher, we have strong momentum higher, etc. When it's moving sharply lower, we have strong momentum lower. So when it comes to momentum, there's different degrees of momentum that you can have. What you'll be looking for is as much momentum in your favor as possible. So for long trades, you're looking for a very high slope, higher. And for that, we are going to be using the 20-period moving average. Reason being is during these times when you do get a spike in the price action, many times you'll get a retracement, just as this. And it's very easy to mistake this pullback here as downward momentum. But as you can see, if during this period, the 20-period moving average maintains its slope higher, that helps us understand that this retracement is nothing more than that. And then it just becomes a matter of identifying when this is going to, when the retracement is going to end and the uptrend is going to continue. Okay, and I'll show you exactly how we do that. But that's the reason why we use the 20-period simple moving average. When it comes to the Ichimoku cloud indicator, this is an indicator that has a few more lines to it. And I'm going to go into the settings and show you this. First of all, I do want to show you that we do use the default settings. They're 9 and 26 on every charting platform I've seen. And we're not going to change that. We're going to leave the default settings. What I do for this is remove the 3 other lines that are on this indicator. In other words, there's the Tenkan, the Kijun, and the Chico lines here. I've unchecked all three and left the span A and span B, which are the cloud portions. But I'm going to, for the moment, go back in and add these back in just to give you a look of what the chart would look like if we left the full indicator on. Okay? So this is what it would look like. Now, at first glance, it may look like a complete mess. Believe it or not, there is a method to this madness, and this indicator will allow you to spot entries and exits. It helps you identify areas of support and resistance. It helps you identify trend, all of that. So it's a very strong indicator, but we like to keep things simple. We don't want our charts clouded up this way and allow us to miss any entries. So again, what we do is we only leave the cloud portion on, and we do so to identify trend. So we're not going to worry about the color of the cloud. The only thing we're going to be looking for is whether or not the price, okay, the candles or the price bars, and the moving average are clearly on one side of the cloud or the other. If they're both above the cloud, then we consider that an uptrend. If they're both below the cloud, we consider that a downtrend. And if one or both are overlapping the cloud, then that's a consolidating phase that we do not want to trade in. Okay? So when we first bring up a chart, we can quickly tell just by looking at the far right here whether we have trend. Okay? And in this case, you can see that the bars and the moving average are overlapping the cloud, so there is no trend in place. So we would immediately discard this and move on. Okay? Secondly, if we had trend one way or the other, we then check the slope of that 20-period moving average to see if we have momentum in our favor. And if it's in the same direction as the trend, then we move on to the next step. That next step is the RSI, or the relative strength index indicator. Now, I'm going to go into my settings here as well and show you that. Okay, then if anyone has any questions, I'll take them before I move on to another setup. Okay? But as you can see here, the RSI, normally on most charting platforms, the default setting for the RSI will be 14, okay, a period of 14. We cut that in half. We move it to 7. We want a much more responsive RSI. So we reduce that to 7. And also, the RSI is typically used to identify overbought and oversold conditions. So usually you'll have a line drawn here at the 70 or 80 level, and then at the 20 or 30 level at the bottom. And if this red line were to go above that 80 level, that would be considered an overbought condition, and you would be looking for the price action to start pulling back, to start dropping from there. If this red line went below that 30 or 20 level, you'd consider that oversold, and you'd be looking for some kind of bounce at that point. We use it a little differently. We remove those lines and we draw one in right down the middle, right at the 50 level, because we're going to be using this as our trigger, as our entry trigger, okay? So let's go back to the chart and let me walk you through the rules here. So let's start with a long trade. Long trade, what we're looking for is trend and momentum on our side. So in a period such as we had back here, we clearly had the bars and the moving average above the cloud. So we know we had an uptrend. We then had, it was clear that we had a nice slope higher on that moving average. So now we know we have momentum on our side. Whenever we have those two conditions in place, we turn our attention to the RSI. And what we're looking for is a move below and then back above that 50 line. Okay, so right back here, right at the far left, this initial pullback here took the RSI below that 50 and then back above. At the point where it crosses back above, okay, that would be your setup candle. So in this instance, let me highlight it for you, and I will zoom in for those of you working on a smaller screen or a laptop. Okay, let's zoom in here. make it a little clearer, right in here. Now, when I zoom in, we lose a bit of the slope, but you can see we still had a slope here. So once we cross back above, and if you look at my crosshairs, and I hover over this candle, you'll see we're clearly above the 50 line on the RSI. If I hover over the previous candle, you can see we were still just below there. So this is our setup candle. Once we've identified our setup candle, all we're looking for a long trade is a trade one tick above the high, the absolute high of that candle. Okay? Once we get that, we go long, and our stop goes just below the most recent low. Now that it cannot go just below the same candle. It needs to be below the most recent low. Typically, it's 1 or 2 candles back. Okay? And then it becomes a matter of managing that trade. But there's a few very important things that I need to make you aware of here that you need to look for. Number one, here's a crucial rule. If, once you've identified this setup candle, if the following candle or 2 or 3 afterwards, if it trades below the low of this candle first, the trade would be disqualified or negated. Okay? That one rule alone will save you from most trades that would otherwise be stopped out. The system is not going to be 100% guaranteed. Full disclosure, I'll tell you that right up front. But what you will experience is more winners than losers and bigger winners than the size of your losers. Reason being, this rule, number one, cuts out many stocks that would have otherwise been stopped out. Okay? So again, if it trades below the low first, it's disqualified, you move on. All right? Secondly, our stop is usually very, very close behind. And thirdly, what you're going to find, it didn't happen in this particular case, but what you're going to find most often is that when it does trigger, it tends to move in our favor immediately, and it's huge for a couple of reasons. Okay? Number one, remember when I was going through the money management rules, I mentioned to you that you need to keep a clear mind and not be worried about your trade once you're in it to be able to manage it appropriately. Well, if it goes in your favor immediately and you're in profit from the start, it's going to be very easy to manage, right? And secondly, for those of you who might trade options here, you know that if you get into a trade and it immediately goes against you, that in order for you to make back that loss in premium, you're going to require a much greater move to the upside. So it's very important to have that trade go in your favor immediately. Now, before I take any questions on the setup, I want to make you aware of a couple other things. Number one, it doesn't matter how far the pullback or that retracement carries on for. In other words, the setup, it doesn't matter if it's in front of the moving average, if it's overlapping the moving average, or if it's beyond the moving average. What matters is that at the time that you do identify that setup bar, what matters is that we still have that upward slope in the moving average. Because if this pullback were to have gone too far, okay, the moving average would start flattening out and even starting to point downward. If that happens, we've lost momentum and we do not want to take that trade. The other thing you're going to notice with this strategy is that during a sustained trend, one direction or the other, you're going to get multiple setups. So in other words, with every retracement, or just about every retracement, you'll get that dip back below that 7-period RSI and then back above, and you'll get another shot at it. So if you miss one, no worries, there'll be another one that'll come along soon. But how should you handle this? Well, once you're in a trade, you really no longer need to pay any attention to the RSI, unless you're more of an aggressive trader. So if you are more of an aggressive trader, you can add to your position at every new setup that comes along. Okay? If you're more conservative, like I am, then what I do is I just maintain that original position and use each subsequent setup as further confirmation that I'm in the right trade and should remain in that trade a little longer. Okay? And lastly, one more thing. What you are going to notice is that many times we'll get what we call a double dip. This W formation in the RSI, meaning it comes down, it dips, it crosses back above, and it may trigger us in or not, but then it dips again and sets up again. These tend to be some of the more powerful moves. Okay, so you want to keep an eye out for these. But this is the reason why we don't put our stop just below the same candle, why we want to give ourselves a little more room and put it to just below the most recent low. So in this example here, we came down, we moved across, this was the setup, it triggered on the very next candle, but then it pulled back, but it didn't pull back far enough to stop us out. And then it triggered again. So again, if you're more aggressive, you could have doubled up on this trade, or you just held it and continued on. Okay, that is the long setup. I'm going to quickly go through the short setup, and then if there's any questions, we'll try to get to those. So short setup is exactly the same thing in reverse. In other words, what we want to spot initially is, do we have trend and do we have momentum on our side? When we first glance at this, we'd be looking for the price bars and the moving average to be below the cloud, the way they were back here on the left of the chart. Okay, so in this case, we had a downtrend in place. Then we look for momentum on that moving average, that slope lower, and the sharper that slope, the better. This was pretty good here, nice sharp momentum. So then we sit patiently, we wait for a pullback. And once we start seeing that pullback, we turn our attention to the RSI. For a short trade, we want to see the RSI cross from above to below that 50 line. Okay? Once we get that, we identify that setup candle, which is right in here. This one right here, sorry, right in there. And then we wait for a trade just below the low of that same candle. Zoom in so you can see it a little clearer, right there. We wait for a trade just below the low of that candle. Once we get in, we go short. And of course, you can short the stock, you can buy a put, you can do a vertical spread, you can sell a call credit spread. There are many strategies you can use. And your stop would go just above the high, the most recent high. Okay? And then it becomes a matter of managing that trade. Now, this is very typical. You see the size of risk that you have here from your entry to your stop compared to the move that follows. Okay? So no one has a crystal ball, and we have no idea where the move is going to end. So we can't expect to catch the full move, but even catching a portion of that move more than overtakes the risk. So that is, in a nutshell, the setup. Now, one more important thing that I want you to have a look out for is this. You see how we went from one side of the cloud to the other here with the moving average, with that slope? That typically is a heads up that a sustained move in that direction is coming. Okay? So if you move from one side of the cloud to the other with a sharp slope in that 20 moving average, that typically kicks off an extended move in that direction. Same thing to the upside. Okay? Now, I mentioned earlier that this does work with futures, with Forex, and so on. So if there's time, I'll show you many more stocks and different time frames, by the way. It works on just about any time frame. But to go through my last example here, that crossing through the cloud, I want to show you something. Let me add a bit more data on this chart. And this is a chart of crude oil. Now remember when crude was hovering around or just over $100 a barrel for many months, and then suddenly it collapsed and went to 40? Well, look at what kicked off that move. There was your heads up. There's that sharp move through the cloud with that moving average, and that kicked off that huge extended move. Now, throughout this period, if I zoom into that period, you can see that there are many opportunities with the RSI here to get into that move. There were several, all of which would have been winning trades there. Okay? Let's look at the euro. Same thing. For those of you who trade Forex, it works exactly the same way. The same settings, same rules. You don't change anything whether you're trading stocks, futures, Forex. It really doesn't matter. But you see, after moving and huddling, consolidating sideways here for many months, we got that sharp move through that cloud with momentum on that 20-period moving average. And after coming through here, it went sideways for a period and then collapsed. And there are many opportunities along the way here. You can see how many times we get the cross through that 50 line all the way here to ride that wave lower. Look at the Forex pairs. Same thing. You can see all the way through here. Okay? These pullbacks, one right here, nice and easy to kick off that move. One right up in here. Okay? So all this is doing is picking out those easy, high probability portions of that trade lower, of that trend. So we come through the cloud with momentum. We know this is going to go on a run lower. But how do we select the safe periods to trade in there? Well, this is how. By using this combination, this will help you identify with every pullback when that pullback ends and when that continuation of that move lower is going to happen. And based on that slope, we know how strong how strong the momentum is on our side. Okay, so that's really what you want to look for. And again, I can show you. I know many of our members like to trade the S&P. Okay, let's look at the S&P on different time frames. Okay, let's go to the 15-minute here, and I'm going to throw in a bit more data. Here, let's go to 10 days, 15 minutes. So there's a trade right in here. You can see it works exactly the same way. All you're waiting for is that trend and momentum in your favor, a pullback that takes it above that RSI and back below, and then you're in for a trade. And same back here. Now, when you get these flat areas, remember, you've lost momentum. You don't want to trade it. Many times they still work out, but unless you're extremely aggressive, I wouldn't suggest it. Okay, 15-minute and the hourly, I really like. Personally, those are the two time frames that I use for this intraday, 15-minute and hourly. And you can see there's many setups along the way. But if you're managing a longer-term portfolio, or you have family, a full-time job, don't have a lot of time to commit to your trading, weekly and monthly charts are fantastic with this. Honestly, if with any system based solely on technical analysis, the longer the time frame, the higher the time frame, the more accurate you're going to get, and the bigger those moves are going to be. But if you go back and look at this on a weekly or monthly, I guarantee you'll be very impressed at just how well this works. Okay, so I still have a lot to cover here. Let me show you something. Actually, do we have time for a couple of symbols? Let me see. I'm just going to bring in Raul quickly to help me read off a couple of symbols and maybe take a quick question, and then I'll continue on with my presentation because there's other stuff I want to share with you.
Vince, we've got about 15 minutes. I know you've got about an hour presentation material still to cover, so we'll do as much as we can quickly. Frank was asking about SWKS.
Sure.
Sorry, people, if they didn't hear me, we just adjusted the microphone. Frank was asking about SWKS.
Okay. So this is a monthly. Let me go back. I'm assuming it's on a daily. Again, what you want to spot when you quickly bring up a chart is trend or momentum. Excuse me. So right now, if you look at SWKS on the far right, we're below the cloud with both price and moving average, so we're clearly in a downtrend. We do have a slope in place. It's not that sharp, but we do have a slope lower. So the conditions are in place. We recently, this week, moved above and back below on this candle right here. So not Friday's candle, but Thursday's candle, we actually moved below that 50 line. So that was a setup candle. Now, Friday's candle did not trigger. It did not go below Thursday's low to trigger in. But this is one you can keep on your watch list, and Monday, if it trades below that low, it would be a valid setup. Now remember, if it trades above the high first, it would be disqualified. Okay? And if you look back here on SWKS, there were numerous setups along this trend here. There were 3 right here. All would have worked out very nicely.
Vince, we'll do one more. Eric was asking about Apple. And Carl, Brock, Susan, Germany. We'll see if we can get to yours.
Sure. Apple's been kind of erratic lately, so not many setups. There was one right in here after this this drop on earnings. You can see that the moving average had kind of flattened out a little, so it wasn't the safest play, but it certainly worked out very well. Right now, it had given us a move back above here. Again, not heavy momentum. So you want to be selective. Remember that. You don't want to look at stocks that are consolidating sideways like this. You want nice, sharp moves. Apple, in the past, has given us some very nice signals. And if you go on the different time frames, you'll see some great setups. Here's the weekly, and look at that move and this move. See, this is what I mean by selecting the safe areas to trade. Okay? But you definitely want to look at that. Okay, I've only got 12 minutes left, so I've got to move on, and I want to show you something. Earlier I said to you that I was going to show you how a charting software that I can give you, but we've recently had this automated by Metastock, and I'm going to just bring that up and show you quickly here. Just give me a second for it to load. I have to, unfortunately, close one charting program and open the other one at a time, or else they will conflict. I have multiple monitors here and different software running on here, along with the GoToWebinar software. So here, let me show you here, and let me just make sure that the add-on is here. We have the correct add-on here. Give me 1 second. Okay. 1 second. No, it must be hidden behind there. 1 quick second. I've got to find the... Sorry, I have multiple monitors and it's hidden on me behind this. There we go. Okay, let's bring that back up and try this one more time. Yep, it disappeared on me. Sorry about that. Let me just see if I can locate it. Okay. Sorry, I can't. It's not working properly here. Okay, let's carry on. Sorry, I wanted to show you what we've done with this indicator. This is the template of it here, but these signals that you see on here are actually from one of our other strategies that I've had on here, but there must be a compatibility issue with the other software I'm running on here. The tech guys are working on it. We'll try to bring it up. What I really wanted to show you was the expert commentary that we've added to that indicator that actually helps you walk through the trade and really holds your hand through it and guides you. Not only tells you when to buy and when to sell. Here we go. Let's see. So let's bring up the chart here and let me try this again. Let's bring this up. Let's see if we can do this. And there it is. So now the indicator is on. All right. And so you can see that it will flag you with the setups. These little diamonds are the setup candles. The arrows are the actual trigger once the trade is officially triggered. There's a little exit flag here that will tell you exactly when to get out. What Metastock has done is put this color ribbon in here to help you read that slope without even bothering to look at that. once it's green, that means we have a slope higher. When it's red, we have a slope lower, and the white periods are those flat areas. Okay, so visually, it helps you read that. But here's what I really wanted to show you was the expert commentary. There's a little window that, when it's attached, will not only tell you when to get in a trade, when to adjust your stop throughout, and when to exit. It's fantastic. It gives you a brief description of what it is and exactly how to do that. Let me bring this back up 1 second. I'm just going to go back to my presentation because I'm running out of time. I apologize for that. Let me just bring up my thing. Here's what I wanted to share with you. So here's what I wanted to offer you today. We've got a class coming up on December 5th where it's our pro training class for this strategy. And in that class, we will go through the full system from entry to exit, including 6 different exit strategies, but we'll focus on the one that's actually programmed into the Metastock add-on for this. I'm also going to show you a very unique way to add support and resistance to this. And this method will help you select those very strong or very high probability trade setups. Okay, so on any given night when you have 5, 6, 7 setups, you'll be able to select the 1 or 2 highest probability setups. I'm also going to teach you a couple of different Fibonacci tools, one that will help confirm those entries and the other that will help you set your targets. And as a bonus in this class, I'm going to teach you how to trade that full Ichimoku Kinkin-Hoi indicator as a strategy in its own. Okay? So normally that's a separate class. I will share that with you as well. And as a bonus, we're going to throw in a 30-day complimentary membership to our Trading Winds Pro service. And with this service, you're going to receive trade alerts. You're going to receive nightly videos every Sunday to Thursday where we recap the markets and highlight trades, not just of this setup, but from all the strategies we use. You're also going to be able to attend live market chat sessions with us that happen every Thursday morning from 10 a.m. to 11 a.m. Eastern. Those are also recorded and sent out to you after. And on our website, there's all our pre-recorded educational sessions that you'll have access to, hundreds of hours of video. So you'll get all of that for just $97. And if as an added bonus here, it's really a Black Friday early special. If you want to add the indicator on with it, you get everything that you see here on the left of your screen, along with a 60-day trial to the Metastock Pro charting software, and that add-on that you will have for life here as well. So the link for it is right up in here, tradingwinds.com/cloud, okay? tradingwinds.com/cloud. And actually, we will, with the $97 class, we'll also give you that 60-day trial to the Metastock software as well, okay? So, do we have any time at all for more symbols and more questions?
We've got a few minutes. I just wanted to, first of all, thank Reed and the rest of the folks at Investor Inspiration. And we did this early Black Friday special just for them. So you do have to use a coupon code. It's CLOUD2015, and that'll discount the price from $497 to $297, which gets you the whole package, including the live class, including the Metastock indicator, which is yours for life, including the 60 days of the Pro service, which normally sells for $250 per month. So you get all of that for $297, but you've got to use the coupon code CLOUD2015. Everything is going to be in your chat box. Very simple. You just click. Vince, I know we have a lot of material still to cover. Let's see if we can get through a few symbols for folks. Bill, thank you so much for your kind word. Bill says fantastic presentation again. Thank you. Michael, Peter, I hope you've got the link. We'll put that in the chat box for you as well. Amazon, AMZN.
Sure, let's look at Amazon. Amazon's one of those stocks that kind of goes sideways for a while, then pops, goes sideways, pops, and so on. Has been trending nicely higher, though, for most of the year. And just recently, you can see right here on the far edge, on this pullback here, was the opportunity to enter. Right here, this green bar here, November 18th, was your setup candle. I'll highlight it for you right in here. And the very next day, the trigger was complete. We got a trade above the high there, which took us long, and your stop should be right here. Now, if you haven't gotten in this trade, I wouldn't suggest you chase it and jump in. Wait for another setup. There's plenty of them with this strategy. So be patient, and you'll be rewarded.
Two quick questions. First
Sure.
one is from Raul. Great name, by the way. He's saying, will the indicator work without the pro service? Absolutely.
Oh yes, without our pro service, yeah, absolutely. Once you get that indicator, it's yours for life. You don't need to be a pro member to have that.
Terry P says, Vince, does the $97 class include all the rules to set up the indicator in other platforms? We don't use, he's asking about Ninja and TC2000. We don't use those platforms, but you will get all the rules, all the exits,
all the indicator settings, everything. Yeah, everything you need, you'll get in that class, no question.
Did you mention that people will get a recording of the previous class within the
No,
next half
actually,
hour?
thanks for raising that. No, I didn't even mention that, and I should have. Once you place your order today for that class, as soon as the order is processed, which will just be a few minutes, you'll receive an email with a link to a previous recording of the last pro class we did. So you don't even have to wait until December 5th. You'll be able to watch that class. I think it's around 3 hours long. And then any questions you have, since we're throwing in that pro membership, you can either bring with you to those live market chats that we have weekly, or bring your questions to that live class on the 5th, and we'll make sure we answer them all for you.
The 30-day membership really is very valuable, does complement the course very well. What happens at the end of 30 days?
If you're enjoying it, you don't need to do anything. It will automatically renew at $97, but if for whatever reason you'd rather not, just give us a call and we'll put a stop to it.
Michael says, love your presentations and your courses are excellent that I have taken. Thank you, Michael. It's
Thank
always
you.
nice to have you on. Stella was asking, are the settings for the Ichimoku cloud any different than what the default settings are?
No, the settings are the same. All we do is we remove those 3 other lines there, and again, I'll show you how to do that in the class.
All right, a couple more questions. Let me just find out. Bill was saying that Kroger gaps are huge. Yes, we've noticed that in the past as well. Take profits and exits. How do you judge those?
Well, in the class, again, I'm going to teach you a Fibonacci tool that you can use to help identify those exits or those targets, and we're going to cover 6 different exit strategies along with the one that we actually have programmed into that indicator. So you'll get the complete package there.
I'll ask you to bring up that offer page again while I answer Judith's question, which is there a certain platform you must use? Judith, no, you can use this system on any platform.
Yeah.
We've had it programmed on Metastock, and it really is more of a convenience and will allow you to scan for 3,000 to 4,000 stocks. I wish we had more time.
I know, that's what I wanted to get to and couldn't, unfortunately, but they have a scanner built in that's really sets them apart from other softwares. It allows you to scan thousands and thousands of charts in just a matter of minutes every night to find these setups. So it's the best feature, actually.
2 offers again, please, if you can explain what you get.
So again, on the left is the full class with the full system entry to exit, the unique method of support resistance, the Fibonacci tools, the bonus Ichimoku class, the 30-day membership, and of course you get with that the live recording of the previous class, all for $97. On the right, you get everything from the left, plus you get the indicator, those 60 days free trial to Metastock, all there for $297. The link is tradewinds.com/cloud. It should be in your link, and I think we're just about out of time.
Enjoy the pre-Black Friday special.
Oh yes, use the coupon code Cloud 2015.
Cloud 2015.
Don't
For those of
forget
you that are on the East Coast, if you look outside, you might see Cloud 2015. So that'll remind you. Hope all is well. And Vince, last word.
Yeah, thanks again for joining us. I hope you got a lot of value out of it. I always enjoy doing this and hope we can do it again. A big thank you to Reed and everyone else at Investor Inspiration for having me back.